Good day everyone, I am Sun Chi Ho. Imagine if Facebook decided to create its own global currency. Instead of using banks, credit cards or traditional payment system, people would send money instantly through Facebook, WhatsApp or Insta. A user in Malaysia could transfer money to someone in another country within seconds and at a lower cost than traditional remittance services. Today, I will be presenting a fintech case review on Libra, later renamed to Diem, a digital currency project initiated by Facebook, now known as Meta. While Libra was announced in 2019, many experts believe it had the potential to transform the global payment system. With access to billions of users and support from major organizations across the payment and technology industry, Libra could have become one of the largest payment networks in the world. However, despite its innovative designs and ambitious visions, the project was eventually abandoned in 2022. So in these presentations, I will be explaining the financial and technical mechanisms behind the project and analyze the reason why one of the most ambitious fintech initiatives in history ultimately failed. So let's begin with the timeline. Facebook announced Libra in June 2019. The project quickly attracted attention from regulators and central banks around the world. In 2020, Libra was rebranded as Diem to address regulatory concerns. However, the challenge remains and the project was officially terminated in 2022. So this case is significant because it represents a major fintech launch and a regulatory challenge and ultimately a failed project. So why this case matters? Libra was different from most fintech projects because it was backed by Facebook, a company with billions of users. What made Libra unique was not just the technology, but the skills. Most digital currencies need years to attract users, but Libra potentially had access to billions of users from day one through Facebook, WhatsApp, Insta, and Messenger. If adopted successfully, Libra could have become one of the largest payment networks in the world. This raised an important question: should a private technology company have the power to operate a global digital currency? The question becomes the central issues of the entire cases. Libra was governed by the Libra Associations, an independent organization established in Switzerland. The associations consist of major organizations from payments, technologies, and digital service industries. Their participation was intended to strengthen the credibility of the project and support its global adoptions. The project's main objectives were to improve financial inclusions, reduce the cost of international payments, and provide access to financial services for people without traditional bank accounts. Facebook believes that many people had access to a smartphone but still lack affordable financial services, and Libra was designed to bridge that gap. Libra was designed to solve two major problems. First, international payments were often expensive and slow because multiple banks and payments providers are involved. Second, many people around the world remain unbanked and have limited access to financial services. According to the World Bank, global remittance fees often exceed the United Nations target of 3%, with some transfer costing more than 6% of the amounts being sent. So Facebook believed that blockchain technology could help reduce these costs and make financial services more accessible. Traditional international bank payments involve several intermediaries, which increase costs and processing time. Money may pass through commercial banks, correspondence banks, payment networks, and foreign exchange providers before reaching the recipients. Libra aims to simplify this process by allowing users to transfer value directly through a blockchain network. The results could faster settlement and lower transaction costs. From a fintech perspective, this was one of the Libra strongest value propositions. Unlike Bitcoin, Libra was designed as a stablecoin. Its value was backed by reserve assets rather than market speculations. This made Libra more suitable for everyday payments because users could expect a relatively stable value. Facebook wanted Libra to function as a practical payment tool rather than a highly volatile investment asset. When users purchased Libra, money entered the Libra reserve. The reserve held assets such as cash deposits and government securities. Libra tokens were then issued to users. When users redeemed Libra, the tokens were removed for circulations. This reserve-backed structure was one of Libra's key strengths. Unlike cryptocurrency that rely purely on market demands, Libra value was supported by real assets. As a result, users would be more likely to trust Libra as a payment method rather than treating it as a speculative investment. So at the technical side, Libra operated on a permissionless blockchain. Only approved organizations could validate transactions through validator nodes. This approach improved transaction speed, efficiency, and scalability compared to many public blockchains. Another advantage was efficiencies. Bitcoins can process only a limited number of transactions per second, whereas Libras was designed to handle a much higher transaction value. This was important because Facebook expected millions of users to use the system simultaneously. Facebook developed Novi as the digital wallet for Libra. Users could potentially send and receive money through platforms such as WhatsApp and Messenger, so these integrations could make digital payments simple and accessible for billions of users. For many users, sending money could become as easy as sending a message. Now comes to the regulatory concerns. Despite its benefits, Libra immediately faced regulatory concerns. Government worried about the monetary sovereignty, financial stability, anti-money laundering compliance, and consumer protections. Regulators were particularly concerned about monetary sovereignty. If billions of users adopted Libra, some countries feared that citizens might rely on Libra instead of their local currency. This could reduce the effectiveness of monetary policy implemented by central banks. Many regulators therefore review Libra not just as a payment system, but as a potential challenge to the existing financial order. Trust was another major challenge. Facebook had previously faced criticisms regarding data privacy. As a result, many regulators questioned whether the company could be trusted with financial information. Even though Facebook promised to separate financial data from social media data, skepticism remained high. This demonstrated that trust is just as important as technology in financial services. As regulatory pressure increased, several key partners from the payments and technology industry withdrew their support for the project. These departures weakened confidence in Libra and raised concerns about its long-term viability. In response, Facebook rebranded Libra as Diem in 2020 and revised project structures, but these changes failed to satisfy regulators. So why Libra failed? Although many people focus on the technology, the failure of Libra was not primarily as a technology failure. The platform itself was innovative and addressed real financial problems. But instead, Libra failed because of regulatory resistance, trust issues and governance concerns, and the withdrawal of key partners. Governments were unwilling to allow a private company to operate a global currency at such a large scale. At the same time, Facebook's reputations and the loss of industry support make it increasingly difficult for a project to move forward. So is there any impact on the fintech industry? Yes. Although Libra failed, it had a major impact on the fintech industry. The project accelerated discussions around stablecoins and encouraged central banks to explore central banks digital currency, we call CBDCs. It also pushed regulators to develop clearer frameworks for digital assets. So one of the Libra biggest achievements occurs after its failure. This is interesting. The project helped shape of the global conversations about digital currencies and influence how governments approach future financial innovations. So what lesson we can learn is innovation must be supported by strong governance. Regulators should be engaged earlier. And also trust is essential for adoptions. Successful financial innovations require cooperations between technology companies, regulators, and financial institutions. So this case demonstrates that even the most advantaged technology can struggle if regulators and governance issues are not addressed effectively. So to conclude, Libra was one of the most ambitious fintech projects ever proposed, and it introduced innovative ideas for digital payments through a reserve-backed stablecoin and blockchain technology. However, regulator concerns, trust issues, governance challenges, and partner withdrawals ultimately lead to its failure. Even though Libra never achieved its visions, but it significantly influenced the future development of digital currencies, stablecoin regulations, and CBDCs. The rise and fall of Libra remind us that successful fintech innovations require not only technology, but also trust, government, and regulator acceptance. Thank you.